Okay, in this video, I want to talk a little bit more about how I use my trend lines because it is a bit different than other people, and how I combine it with CRT levels. And I want to kind of explain why the market does what it does here when you're dealing with these trend lines. We had a couple setups in the last week on the New Zealand yen H1 time frame, and both of them actually involved a CRT level, and they also involved a trend line the way that I use them. So I want to go over them. I touched on this a little bit in the course, but I've really been trying to hammer this home in the group chat so that you guys get it. So make sure you watch the other video on the trend line trading if you've only caught this one. All right. So anyway, our CRT level on Friday was right up here. This move right here was when Janet Yellen came out and made her statement, and we also had GDP this morning or Friday morning. So this is what this big move was up about here. But anyway, you had a CRT level over here, but again, I want to focus on the trend line here. We know that I draw my trend lines a little bit different than other people because I am a counter trend trader for the most part. Most people are going to draw their trend lines like this. I never had much luck drawing my trend lines like that because what I would find is by the time you're able to spot a trend line like that, the market has hit it so many times it's getting ready to crash through it, and then I take a loss on it. So I really don't use my trend lines like that. But here's the big idea. We have a CRT level up here, which means the market is going to reverse off of this level because this is the level that the big banks like UBS and Deutsche are watching. So this is going to be a very good level to take a short in the market. What I also want is I want other confluences if I can get it, such as a max move, which we don't have here, or a trend line, or a R1, 2, 3, 4, 5 level, whatever you can come up with here. In this case, we had the CRT level, which is going to give you an 80 to 90% chance of success. And then you've also got a trend line here, and this was also the daily R4. So you had a very, very good level up here to take a short on. It did not have the max move, which is something I like, but this is the trend line. Why was the trend line formed like this? I kind of want to go over the psychology of these trend lines. First of all, in the current market structure, this right here, the reason why we are creating a trend line like this is because we can only get so far away from this moving average before sellers are going to push it back down. Here you get this far away, they push it back down towards the moving average. Again, we go up about this far and they push it back down to the moving average. Again, over here, over here, over here. This market structure has created a trend line because sellers will only allow the current market to go so far away from this moving average before they push it back down. So in the current market structure, you're going to have sellers selling off of this trend line. And you're also going to have sellers off of this area of resistance over here. So your level to get in would be right around 73.87. Now, based off of the CRT level, the market could have reversed anywhere into this level right here. You can see it hit it here. And let's see, this was 73.37. And then we quickly dropped it down to 73.48. So almost 30 pips there. And then we came back up again. We were able to hit this trend line. We spiked it just a little bit. They took stops up here. And then the real move down began. And we're probably going to come all the way down to this moving average. And by then it's going to be 1, 2, 3, 4, pretty much 5 hits of this moving average here heading up. And so there's a very good likelihood that this thing could be getting ready to go a little bit further than just this trend line or this moving average right down here. And if you look at the 4-hour time frame, this was the level. It's a pretty good level. So because it is a pretty good level on a higher time frame, you're more likely to get a bigger reaction off of it. Again, remember, if it is a bigger time frame, you're going to get a bigger reaction. So this is the level that you should have been watching on the New Zealand yen on Friday when Janet Yellen came out with her comments. Because again, you have sellers pushing it down once we get so far away from the moving average, which created this trend line. Not only that, but you had a CRT level, and this was 1, 2, 3. This was the fourth wave up. So this trend is getting very much exhausted, and it should be coming down. Still, this is a New Zealand yen trade, and again, when it comes to your stop loss, I generally recommend 1 to 2 bars. Again, I'm using bars as my range because you don't want to just use a set amount of pips, because you're going to have different markets, different volatilities on each pair, and depending on what season you're in. The summer months tend to be a little less volatile than the fall or the winter. So make sure you're basing your stop loss off of grid bars, because it's going to give you a pretty accurate idea of the current market range. So you could do 1 to 2 bars above the high. If you had 1 bar above the high, again, you were still in the trade. You didn't get stopped out from this wick. And you can see this level right here went 1, 2. You're a little over 2 bars in the money, or yeah, 2 bars in the money right now. So this would have been a nice 2 to 1 here. And this right here, if you put it 2 bars above this level, if you would have took partial position here, 2 bar stop loss, and right now you're in the money 1 bar. So you're not quite to your 1-to-1 reward to risk. But again, make sure when you're entering up in these zones that you start with smaller orders first, and to put your bigger orders at the better levels. But that's the first level. That's from Friday. And then we had another case very similar to this on the 1 hour New Zealand yen. And this was on, let's see here, the date on this was 8/17. So this was last week. But again, here's what we have. We have our trend line down here. Now there's a couple different ways to draw the trend lines. The way I draw them is I want to make sure that whatever is hitting my line the most is where I'm drawing the trend line. And I will do this based off of candles, and I will do it based off of wicks. So for that reason, this is where I'm going to draw my trend line, because you have the candle low, the wick low, the wick low, the wick low. So this is going to be the way I draw my trend line. You could also draw something like that. Again, you get your candle. You got a bit of a wick here, the candle low. You have a wick here, wick here, wick here. So you may have drawn it like that, but again, you want to make sure that these trend lines are at a 45-degree angle. Something like this is not good. Something like that is not good. If it's a 45-degree angle, you're in the money. That's about what they should look like. And again, you don't want to just get in because you have a trend line. You also want to make sure you have a viable level where the market is likely to bounce. And again, right down here, this is your CRT level. This right here to this right here. This is the range for the CRT level. You could probably push it up a little bit more to include this. This is still pretty accurate. So your CRT level is anywhere from 72.21 to 72.33. So what I would have done is probably put an order here, 2 orders here, or excuse me, 1 order here, 2 orders here, 3 orders here, so that if price does fall down to the lowest level, you're getting filled with the bigger lot sizes. So again, this is your CRT level, and here is your trend line. So again, you're going to have buyers. You're going to have the big banks situated down here because it's a CRT. And then you're also going to have buyers pushing up price because of this trend line. Again, you're only able to come so far away from this moving average, and then buyers scoop it up and push it back. Again, sellers push it down. Buyers come in because it can only get so far away from the moving average. They push it back. This is the psychology behind these trend lines. So you've got trend line buyers situated down here, and then you've got buyers from support, and in this case, again, it's a CRT level. So you've got a lot of buyers stepping in down here. And again, if you go to the 4-hour time frame, go to a higher time frame. Let me get rid of these so you can see this a little better. If you go to the 4-hour time frame, if you're able to see this level on a 4-hour time frame, the reaction is going to be bigger because it's a level off of a bigger time frame. In this case, this was your level over here. This is a very big level because it is a very isolated level on the H4 time frame. So you can expect a pretty big reaction off of this because it's a pretty big level on the H4. And so even if you enter down here, your average should have been close to the bottom because, again, maybe you're doing 1, 2, 3, 4 lot sizes. You stack your orders down here. Your average is going to be near the low. So if your risk on this is 1 grid bar below the low, you're really risking just over 1 grid bar on the total position. And you're watching this thing go 1, 2, 3, 4 on the first push up. So at any rate, you could have gotten out of here for almost a 4-to-1 reward to risk. Even if you're getting out at 2-to-1, you're making a ton of money, and these are rarely ever going to fail on you because you have a CRT bank level, and you also have a trend line. You have the trend line buyers coming in right here. Again, for the trend lines to be most accurate, you want a 45-degree angle, and the pushes up need to be pretty significant, preferably at least to the moving average. If you were to see a push here and then maybe just 1 grid bar back up, come back down, 1 grid bar back up, come back down, I would not be nearly as interested in the level, the trend line, because you're not finding a lot of buyers pushing it up. But with big ranges like this, you're more likely to get a big reaction when we hit the trend line. So make sure you have that going for you, and make sure you also have a 45-degree angle. And of course, to get the best entry, you want to make sure that you have some kind of level, preferably a CRT level if you can get them. If you can get them, then you're going to make a ton of money off of them, and your success rate should be well over 90%. If there's not a CRT level, make sure you have a support and resistance level of some form. I want to go to, let's see, it's the Euro New Zealand. I want to go over this one too. Again, I'm watching this level. This was a level from Friday. Again, here's the idea. We get a push down. Buyers push it back up towards the trend line, or the moving average. Again, another push down. Buyers scoop it up, push it back up. See, we can only, in the current market structure, we can only get so far away from the moving average before we get back up to it. This is creating your trend line. This is about probably where you're going to want to draw your trend line. Again, you have this right here. You've got a bit of a wick here. You got candles here. You got a wick here. So this is probably the best way to draw your trend line. You could have drawn it like this. I mean, it's really, again, it's really the area that is being hit the most by the wicks and the candles. So this is about where I would draw. You can see that we didn't quite come down to it. But again, you want to look for a CRT level where the banks are buying it up, or you want to find some other form of good support. You don't want to just buy because you're at a trend line. And again, the pushes up were pretty dramatic each time we hit the moving average, or each time we hit the trend line. So that tells me that if we hit it down here, it's probably going to see a pretty good push up. Not only that, but we have a CRT level over here. This is, because of the wicks, this is a very big CRT range to get into the market. But here it is. And again, in cases like this, what I usually do is I wait till the level gets a little to the extremes. In other words, I don't want to stack orders 2 grid bars like this. That's just too much risk. What I'll probably do is wait till it gets closer to the bottom and stack them about 1 grid bar is about the furthest I'll go. So maybe I'll put on 1 lot here, 2 here, 3 here, 4 here. And again, you see part of your position got triggered. So you get in at $1.5325 because you have, again, you have this trend line which is created because you have buyers scooping it up under the current market structure once it gets so far away from this moving average. And then over here we have a CRT level, which is where the banks are going to be loading up the boat. And so you can get in down here again. I get in my trades in a range because sometimes you're not going to get all the way down here. You're going to miss a trade. But you also want to leave buying power in case you get a better entry. So anyway, my entry is going to be $1.5325 on this. And to figure out how far this is going to run, again, you can see the majority of the time buyers pushed it up to the moving average. So that is a good target. The other thing you want to do, again, go to the higher time frame. Is this a level off of a higher time frame? looking at the H4 time frame, you can see this is a huge level on the 4-hour time frame. So this is more than likely going to see a pretty good reaction. So you may want to leave part of your order on to run beyond the first moving average. And again, if you were to put your stop loss 1 bar below the CRT level, your risk on this is going to be 2 bars, and your risk on the bigger orders, if you were to get filled, would have been just 1 bar. In this case, your risk is 2 bars because that's the only order you got filled, but we went 1, 2, 3, 4, 5, 6 bars already. So really, if you would have exited all of your position up here, which is a nice swing point because of this high, you were looking at a 3-to-1. You may have risked 25, about 60 pips right here, but you made like 160, 170, 180 pips off of this up here. But again, trend lines combined with CRT levels or some other form of support and resistance. Let's see if I can find another one here. Because the more examples of this you see, the better off you're going to be. Again, you want a 45, let's do the 1 hour. You want a 45-degree angle on your trend lines. You can go a little steeper if you need to. You want a 45-degree angle. And like I said before, you want pretty significant pullbacks into the moving average. Okay, I see something right here. Again, this is a New Zealand trade, very similar to the other one. This is actually a trade that I pointed out about a week ago when we were down in this area. I said if we were able to get up to this level, make sure you watch it because this is a CRT level up here. Again, you have a bit of a double top up there. Here's what happened. You get a push up away from the moving average. Sellers push it back down. We get near again this area. We get too far away from the moving average, so we push it back down. We hit it again. We get too far away from the moving average. They push it back down. And this keeps happening over and over and over. So you have got a trend line that has been created by all these sellers up here pushing price down, which is right up in this area. And you have your CRT level over here. So again, you have a firestorm for profit. So again, the range up here to get into the market is going to be right around this area. So you could have sold up here. But again, markets respected the trend line. Very rarely is it going to go beyond this trend line. And if it does go beyond the trend line, what it's going to do, make a euphoric move, and it's going to come crashing right back down. Does it 95% of the time. But the majority of the time, you're not going to go beyond this level if you have a CRT. So again, trend lines combined with a CRT level are a gold mine. But again, if you got in at 71.16, price came all the way back down to the moving average to about 70.65. So you're talking about 50 to 60 pips of profit on this one that you should have made, which if you got in at the trend line up here, you're talking 1, 2, 3, almost 4 bars of profit. If you got in at the resistance zone, the CRT zone up here, 1, 2, you've got almost 3 bars of profit right there. Again, if you're doing your risk 1 bar above the CRT level or 2 of the max, you're still getting a pretty good return on your money. You're keeping your money management pretty sound here. So again, make sure you're watching the areas that have a CRT or some other form of resistance with a trend line because these trend lines are a gold mine. But again, remember, make sure the pullbacks are pretty significant and make sure you're at about a 45-degree angle. Something like that is no good because if you get something like that, it's much easier for the market to explode through it and stop you out. Or even if it's like this, that's good because the market is going to have a very hard time blowing through something like that because it's so steep. But make sure on something like this that, again, your pullbacks are pretty significant. And usually on a trend line that is that steep, pullbacks will not be as significant. So again, 45-degree angle is really the gold mine here. But make sure you're watching CRT levels. Make sure you're watching these trend lines. And I hope you now understand how these trend lines are formed. And we will see you in the next video.